Welcome back. By the time you're seeing this video, it should be after Christmas. Hope the holidays went smoothly and you got everything you wanted. In this video, I'll be talking about Vanguard S&P 500 ETF. So as you can see from the top left-hand corner, this is the Vanguard website. But before we get into any of that, let's first talk about what an ETF is. So ETF is short for Exchange Traded Fund, and it's an investment fund that holds a lot of different assets. It can hold stocks, bonds, and also commodities. So it's basically like an individual stock. Like if you're buying Google, that's how to be like. You go into the market, you look at what the buy price is, and we can go back on the Vanguard website and look at the market price, which is $629.73. So first of all, as you can see in the name, you can see S&P 500 ETF. The reason I mention that is because VOO tracks S&P 500, which is a collection of 500 different companies, all basked into one stock. So getting back to the website, we can see that the category is large blend. It has 500 different assets. The expense ratio is 0.03%, which that's important if you really think about it, but I'm gonna come back to that later. Another thing that's important is the risk. This is rated at a 4 out of 5 risk. And as with any investing, everything comes with a risk. But you can also minimize that risk. And minimizing that risk is the ETF. But before any of this gets started, I'm not a financial advisor. This is not financial advice. If we take a look at my account, we can look at my total account value, which is currently sitting at $4,165. And if we look down at the bottom right-hand corner, you can see that VOO, I currently own 1 share of it. The market value, which is how much I put into it, is $779.40. Unrealized gains, I'm up $86.58. My average price of what I bought it at was $562.18. The reason why I'm bringing up VOO is because it's more of a safer investment. It's not just one stock like Google, where the fluctuations can go up high and be very high, or it's low and it be very low. So if you don't have a stomach for it, the ETF is a great option. So if we scroll down a little bit, we can look at the year-to-date returns. It's currently up for the year-to-date at 18.31%. And that's as of December 22nd, 2025. So as we scroll down a little bit more, we can read that the minimum investment is $1. All you need is $1, and you can invest into this ETF and own part shares of 500 different companies, a pool of different companies. Once again, we see the expense ratio, which is currently 0.03%. That's going to be super important. And as we scroll down a little bit more, we can actually look at some data. First of all, we can read that the month end is 0.24% versus the benchmark, which is S&P 500, and that's currently 0.25%. S&P 500 beats it by 0.01%. Now if we look at a 3-month total, VOO trails right behind the S&P 500 as VOO comes in at 6.33%, while S&P 500 comes in at 6.34%. So still trailing right behind S&P 500. Year to date, 17.77. 17.81, 1 year, 14.96% for VOO, 15% flat for S&P 500. Now, if we look at since inception, which is 09, 07, 2010, all this means is when it was first available to the public. So VOO was 14.90%, whilst S&P 500 was 14.94%. So it's trailing right behind the S&P 500. But let's look at something. I'm gonna go back onto Webull and I'm gonna show y'all something. So firstly, what I'm gonna do is type in S&P 500, which is this SPY, SPY. And we can look at the SPY is trading at $687.96 per share. That's how much it takes to buy 1 share of it. We can also look at the expense ratio, which is right here. The expense ratio net is 0.09%. Keep that in consideration. Now, if I type in VOO, we can see that Vanguard S&P 500 ETF, the market price right now is $632.67. Mind you, S&P 500 was $687. Or somewhere around that range. Now, if we also took a look at the expense ratio, it's 0.03%. So the barrier to entry into VOO is a little bit less than S&P 500. All you have to do is invest $1. But you might be asking, what is the expense ratio? And I was asking that same question when I started. So all an expense ratio is, it's just an annual fee you have to pay for owning a mutual fund or ETF. And it'll be expressed as a percentage value of your investment. So let's say you invest in an ETF. It has the expense ratio of 0.50%. The cost annually would be $5 for every $1,000 you put into the company. So putting everything all together, is you investing me managing your money, and what I get out of it is an expense ratio. So I'm not taking your whole investment as a fee. I'm taking a little cut. Let's say 0.50% of that $1,000. It'll only cost you $5 annually, but that's only for every $1,000 invested. I skipped over this at first, but let's look at the product summary. First of all, we can look at investing stocks in the S&P 500 index, representing 500 of the largest U.S. companies. So if we look at the second bullet point, we can read, goal is to closely track the index return, which is considered a gauge of overall U.S. stock returns. Look at the third bullet point, offers high potential for investment growth. Share value rises and falls more sharply than that of a fund holding bonds. And then lastly, more appropriate for long-term goals where your money's growth is essential. So if you want to grow your money, you have VOO. So skipping down a little bit more, this is so important right here, the expense ratio. We can read that VOO's expense ratio is only 0.03%, whereas the average expense ratio of the similar funds is 0.73%. So as we scroll down a little bit more, we can look at the chart price and how it's been fluctuating. Also, as we scroll down a little bit more, we can read that the number of stocks that VOO holds It's 505 different companies, whereas the benchmark is 503. They have the same media market cap of $1.5 billion. The earnings growth rate is 23.8%. That goes for both ETFs. The PE ratio, which is price to earnings, is 0.1 higher on VOO as opposed to S&P 500. And if we look at the return on equity for both ETFs, it's the same at 27.3%. And if we look at the total assets of 11/30/2025, it's currently $1.5 trillion. We can also look at the style box, and all this does is kind of explain the whole thing. It's a large blend of stocks. So it's both value stocks and also growth stocks. We can also read this right here, and it says risk associated with moderate to aggressive funds. And it reads, Vanguard funds classified as moderate to aggressive are broadly diversified but are subject to wide fluctuations in share price because they hold virtually all of their assets in common stocks. In general, such funds are appropriate for investors who have a long-term investment horizon, 10 years or longer, who are seeking growth in capital as a primary objective, and who are prepared to endure the sharp and sometimes prolonged declines in share prices that occur from time to time in the stock market. This price volatility is a trade-off for the potentially high returns that common stocks can provide. The level of current income produced by funds in this category ranges from moderate to very low. That's something to keep in mind. Now, this is important right here as well, the weighted exposures. So what this is, it gives you a breakdown of different sectors that VOO is invested into. This is also compared to S&P 500. So first we can read that communication sectors, VOO and S&P 500 are both concentrated at 10.70%. Consumer discretionary, they're both at the same percent at 10.30%. Consumer staples, 4.80%. Energy, 2.80%. Financials, 13% flat. Healthcare, 9.80%. Industrials, 8%. Information technology, 34.60%. Materials, 1.70%. Real estate, 1.90%. Utilities, 2.40%. So once again, this tracks the S&P 500. This is why they're exactly the same. So to scroll down a little bit more, we can look at the holding details. And this is as of 11/30/2025. And all this does is break down what is actually inside VOO. The different companies, different assets. We can look at Nvidia, Apple, Microsoft, Amazon, Broadcom, Google, Meta, Tesla, Berkshire Hathaway, and these are just the main ones. It'll give you a breakdown of the percent of the fund. As you can see, they're heavy in Nvidia right now at 7.38% with 616 million shares and $109 billion invested. And then Apple, 7.07, 6.25 for Microsoft, Amazon, 3.87, Broadcom, 3.24, GOOGL, 8.13%, GOOG, 2.56%, Meta, 2.40%, Tesla, 2.06%, and then Berkshire 1.61%. Summing that all together, if you want all the companies but you don't want the risk associated with those companies, VOO is always a great option. And scrolling down a little bit more, the distribution of the dividends, they do pay back their shareholders. The last dividend they did issue was on December 24th, 2025, and the amount per share was $1.77. And then scrolling down a little bit more, you can see who's the manager of the portfolio and just a little bit more. Now as I open up Webull, I currently have one share, and this is something I definitely want to allocate more money towards because it's just a safe place to put my money into, although there is risk associated with it. My ROI, which is just my return on investment, so far is $86.47. And all I did is just put money into it, just let it sit. As with everything, there's risk associated with it, but if you can stomach that risk, why not? So putting everything together, an ETF, especially VOO, is a place where I put my money into because I know my money's gonna compound in that investment. And also, that money in the market is far better than cash, and also high yield savings account. But as the year wraps up, I'll be able to check the yearly returns to see if I'm making over what that threshold is. My goal is to shoot for 10 to 15%. A high yield savings account, the one that I had personally, was returning around 4%. So even at the lowest of VOO, if I get a return of 10%, I'm super happy. But also I want to stay on top of inflation because inflation is something to account for as well. Your money today will be less valuable than your money tomorrow, but it's just the reality of the situation that we're in right now. So as I always say, just make sure you invest, man. But hey, you do what you want with your money. I'll give you the information. Now you can look into it. So I'll catch you on the next one. Wait, before this video actually ends, I need to mention that VOO synchronizes the S&P 500, and they both rebalance. So whenever the S&P 500 rebalances, which means they go in and they change stocks, they buy and sell stocks, VOO will also do that as well. Now I believe that's quarterly, but make sure you fact check me on that one. But I know they rebalance, and it's something to keep in mind. So it's not one stock's forever, it's multiple different stocks, and at any time, if the fundamentals don't align with what they want, they'll sell the company. Then they'll buy into a new one. But keep that in mind. That being said, cue the outro.
What a time to be alive, yeah. What a time to be alive, yeah. What a time to be alive, yeah. Put a other, yeah, yeah. What a time to be alive, what a time to be alive, yeah. You should spend my yeah, you get hit with the fire, yeah. Yeah, we doing another 5.